What if you could take $100, the cost of a nice dinner out, and turn it into $10,000? It sounds like a wild fantasy, but in the world of crypto, these kinds of stories pop up. But here's the thing most people don't get, it's rarely about blind luck. The vast majority of investors are just buying a coin and praying it goes up. But a small group of successful traders are using specific, repeatable strategies to get ahead. They aren't just gambling, they're playing with a plan. For years, I was on the outside looking in. I'd throw a little money at a coin, hope for the best, and then get frustrated when my portfolio went sideways. I was convinced the stories of huge gains were just for the Bitcoin OGs or venture capitalists with deep pockets. But then I stopped just watching and started digging into what the winners were actually doing. And what I found changed my whole perspective. It wasn't about having more money, it was about having a smarter game plan. In this video, I'm showing you that game plan. I'm going to break down the 3 specific strategies I use to grow a tiny $100 investment into over $10,000. Now, this isn't some get rich quick nonsense. This is a blueprint, but it's important to be realistic. A 100x return is exceptionally rare and involves huge risk, especially as the market matures. This is about understanding the strategies that create the potential for big wins. We're covering everything from finding overlooked projects to using techniques that can multiply your capital. So if you're tired of feeling stuck, get ready to learn how the pros play the game. Let's be real for a second. You've seen it, right? You're scrolling through social media and see a screenshot of a trade that made someone thousands in a day. You see headlines about meme coins making teenagers rich or someone retiring early off a single smart investment. And when you look at your own portfolio, which is maybe up a little, maybe down a little, you can't help but feel like you're missing something. I was right there with you. I got into crypto with the same dream as everyone else, a little financial freedom. I put in a few $100, bought the big names I saw on the news, and then I waited and waited. When the market had a good week, I felt like a genius. Then it would have a bad week and the panic would start creeping in. My strategy was basically just hope, and it was getting me nowhere. My turning point wasn't some secret tip or a lucky guess. It was a moment of pure frustration. I remember looking at my initial $100, which had barely budged in months, and thinking, there has to be a smarter way to do this. I realized the people who were really winning weren't just hodling for dear life. They were active, they were strategic, they understood that in a market that moves this fast, you can't just be a passenger. So I made a deal with myself. I was going to treat that tiny $100 investment like a professional would treat $1 million fund. I dove headfirst into research, not just which coins to buy, but the strategies that generate wealth. And I started seeing patterns. The winners weren't just buying assets, they were writing narratives, using new tech, and putting their money to work in ways I hadn't even heard of. They were playing chess while I was playing checkers. This journey was a deep dive. I learned about emerging crypto narratives, the power of decentralized finance, DeFi, and how to spot value before the crowd does. And yeah, I made mistakes. I chased pumps, sold way too early, and bought way too late. Every mistake was a tough lesson. But slowly, I started piecing together what worked. And that's when I developed a system. It began with turning that stagnant $100 into $500. Then that $500 became $1,000. And by applying these strategies over and over, I eventually crossed the $10,000 mark. It wasn't magic. It was the result of the 3 strategies we're about to get into. This is proof that with the right approach and discipline, even a small start can be the seed for something much bigger. Now, let's get into the first strategy that kickstarted everything. The first strategy, and the one that built the foundation for everything else, is what I call narrative surfing. If you want to find those rare 10x or 50x opportunities, you can't just buy what's popular now. You have to figure out what's going to be popular next. In crypto, narratives are the big stories and trends that grab the market's attention, and more importantly, it's money. Think about it. In past years, it was DeFi, then NFTs, and the metaverse. In 2025, powerful narratives continue to emerge, like the fusion of AI and blockchain, the tokenization of real-world assets, RWA, the massive growth of layer 2 scaling solutions, and the ongoing influence of stablecoins and institutional adoption. The average investor buys a coin because they saw it on the news. A strategic investor finds a powerful narrative first and then looks for promising projects inside it. Why? Because when a narrative gets hot, a rising tide lifts all boats. Money pours into that sector, and even smaller projects can see explosive growth. The trick is to get in before the wave hits. So how do you do this with just $100? You start by becoming an information junkie. Your first job isn't to be an investor, but a researcher. Spend your time on platforms like X, formerly Twitter, which is the heart of crypto discussion. Follow developers, analysts, and venture capitalists. Monitor what technologies they're excited about. Sites like CoinGecko also publish reports on crypto narratives to watch. For 2025, key themes include AI, real world asset, RWA tokenization, and layer 2s like Arbitrum and ZK Sync. Let's use a case study. Back then, I noticed a lot of buzz around AI and crypto. The story was powerful. Integrating AI could make blockchains smarter and more automated. So instead of randomly shopping for altcoins, I focused all my research on this one emerging narrative. Next, I had to find a specific project. This is where you need a quick and dirty fundamental analysis checklist, even for small coins. Here's what I looked for: the team. Are they public and do they have a good track record? An experienced, transparent team is a huge plus. The tech and use case. Does it solve a real problem within the narrative? Is it unique? Read the white paper. You don't need to be a coder, but you should be able to explain the project's goal to a friend. Tokenomics. This is critical. Look at the coin's total supply versus its circulating supply. A project where the team can dump a ton of tokens on the market at once is a major red flag. Community and activity. Check their Discord, Telegram, and GitHub. Is the community alive? Are developers actually shipping code? A ghost town is a bad sign. After a week of digging, I found a small cap project, let's call it AI Coin, that checked the boxes. It had a public team, unique tech, decent tokenomics, and an active community. Its market cap was tiny, around $10 million, giving it a ton of room to grow if the AI narrative took off. Now, I didn't just throw my $100 in all at once. I used a variation of dollar cost averaging, DCA. I split my $100 into 4 chunks of $25. I bought the first $25 immediately. Then I set limit orders for the other 3 chunks at prices 10%, 20%, and 30% below the current price. This is a way to manage the wild volatility of small cap coins. If the price dipped, I'd get a better average entry. If it shot up, I was at least in the game. In my case, 2 of my limit orders hit. My $100 got me into AI coin at a great average price. Then I held and watched the AI narrative. Sure enough, the buzz grew. Big influencers started talking about AI projects, and because I was already positioned, my little AI coin started moving. My $100 became $200. Then a major exchange listed it, and within 2 months, my $100 had turned into over $200. Let me be clear. This outcome is highly speculative and not typical. Most small cap coins are extremely risky and many fail. This is a high risk strategy that paid off, but it could have easily gone to zero. This is the power and the danger of narrative surfing. It's work, but it's how you can position a small investment for potentially massive growth and build the capital for what comes next. Once you've used the first strategy to grow your $100 into something more like $1,000, a new set of doors opens. You now have enough capital to go from being a passive investor to an active participant. This brings us to our second strategy, airdrop farming. An airdrop is basically a marketing move where new crypto projects give away their tokens for free to early users. They do it to build a community and get their token into more hands. For you, it's like getting free shares in a startup just for trying their product. Some of the biggest airdrops in history, like from Uniswap or Arbitrum, have been worth thousands of dollars to individual users. Airdrop farming is the process of hunting down projects likely to do an airdrop and interacting with them to get on the eligibility list. This is a great strategy for someone who's grown their capital to the $1,000 level. You'll need some money to pay for transaction fees, gas, but your return on investment can be huge. You're using your capital to try and generate new capital. So how do you become an airdrop farmer? First, you need to find the opportunities. Look for well-funded projects that don't have a token yet. The logic is simple. If venture capitalists put money in, they'll eventually need a token to see a return. You can use tools like DeFi Llama to find protocols with high total value locked, TVL, but no token. Following airdrop-focused accounts on Twitter and using sites like airdrops.io are also smart moves. In 2025, some of the most promising areas are new layer 2 blockchains and restaking protocols. Once you've got a list of targets, you need to interact with them. This is the farming. Eligibility is usually based on a snapshot of your activity. You need to look like a genuine user. Common actions include using a bridge, move some funds like ETH from the main network to the new layer 2 you're farming. Making swaps. Use the decentralized exchanges, DXs, on the platform to swap different tokens. The goal is to build a transaction history. Providing liquidity, deposit some tokens into a liquidity pool. Projects love rewarding users who do this. Using multiple apps, don't just stick to one app. Interact with 5 to 10 different applications in their ecosystem. Community engagement, join their Discord. participate in governance votes. Sometimes just being an active member helps. Let's walk through a hypothetical. After hitting about $200, I set aside $500 for airdrop farming. I didn't want to risk everything, so risk management was crucial. I also created a brand new crypto wallet just for farming to keep my main funds safe. This is a must-do security step. I found two promising, well-funded Layer 2 networks without a token. Let's call them Chain A and Chain B. I bridged $250 to each. Then every week for 2 months, I spent an hour making a few swaps, lending a bit, and minting a cheap NFT. The gas fees cost me around $5 to $10 per week per chain. Over 2 months, I spent about $100 in fees. The keys here are consistency and patience. You're building a track record. 6 months after I started, Chain A announced its airdrop. Because I had a consistent history of interacting with multiple protocols, my wallet was eligible. That airdrop was worth over $4,000. While huge windfalls like this are less common in 2025's more competitive environment, accumulating several smaller airdrops can still be incredibly effective. A few months later, Chain B airdropped, adding another $2,500. In total, my $500 farming fund, with about $100 spent on fees, generated an extra $6,500. This strategy is more hands-on, but the results can be game-changing. This injection of capital is what will fuel our third and final strategy. After the first two strategies, your portfolio might be sitting somewhere between $5,000 and $8,000. You've proven you can spot trends and be an active player. Now it's time for the final, most advanced strategy, amplifying those gains with leveraged DeFi and yield farming. This is how you make your money start working for you. At its core, yield farming is lending or staking your crypto and DeFi protocols to earn rewards like interest in a supercharged savings account. The returns, or yields, come from things like transaction fees or token rewards. While basic yield farming on trusted platforms like Aave or Uniswap can offer solid returns, often in the 5 to 15% APY range for stablecoins or blue chip pairs, advanced strategies aim for higher, albeit riskier returns. Warning, this is by far the riskiest strategy. It involves complex protocols, and you need to understand concepts like impermanent loss and liquidation risk. Never invest more than you're willing to lose, and always research the platforms you're using. Look for protocols that have been audited and have a high TVL, which signals market trust. While some sources mention APYs of 50-100%, these are typically found on new, high-risk platforms and are not the norm for established players in 2025. With that said, let's break down an advanced strategy. Leveraged liquidity provision. Let's say I have $5,000 in my portfolio. Step 1, provide liquidity. I decide to provide liquidity on an established DEX like Uniswap. A relatively conservative choice is a pool with a blue chip asset and a stablecoin, like ETH USDC. This helps reduce some volatility risk. Let's say this pool offers a 20% APY from trading fees. I could just deposit my $5,000 as $2,500 in ETH and $2,500 in USDC and earn that 20%. That's basic yield farming, but we can turn it up a notch. Step 2. Use LP tokens as collateral. When I deposit my funds, I get LP tokens back, representing my share of the pool. These tokens are an asset themselves. I can take them to a lending platform like Aave and use them as collateral to borrow against. If the platform allows a 50% loan to value LTV, I can borrow up to $2,500 in stablecoins. Step 3, the recursive loop. Now I have $2,500 in borrowed stablecoins. I can repeat the process. Take that $2,500, swap half for ETH, and deposit it back into the same liquidity pool. Now I'm earning 20% APY on my original $5,000 and on the extra $2,500. This is a looped strategy. It effectively lets me earn yield on $7,500, even though I only started with $5,000, boosting my overall APY. Step 4, managing risk, advanced. An even more sophisticated approach is a delta neutral strategy. The main risk of providing liquidity with ETH is impermanent loss. If ETH's price swings wildly, my position could be worth less than just holding the assets. To counter this, after borrowing the $2,500 in stablecoins, instead of looping it, I could use it to open a short position on ETH on a decentralized perpetuals exchange. This short position profits if ETH's price goes down, helping to hedge the risk in my liquidity pool. The goal is for the yield from the pool to be greater than the cost of holding the short position. This is a professional level strategy to farm yield with reduced exposure to price swings. This was the final piece of my journey. I took the capital I had built and deployed it into these kinds of structured structured DeFi plays. I didn't go all in on one thing, I spread the risk across different protocols. I also used auto compounding vaults like Yearn Finance, which automatically reinvest your rewards to maximize the compounding effect. This is the process that took my portfolio over the $10,000 line. The yield became a steady stream of income that I could either reinvest or take as profit. This is what it means to make your money work for you. It's the most complex and riskiest part of the journey, but it's also the gateway to building real wealth in this space. So let's recap the three-stage system we just mapped out. It's a progressive plan designed to grow a small investment into a much larger one. First, we started with strategy one, narrative surfing and smart altcoin selection. With just $100, we learned to stop chasing hype and start anticipating it. We became researchers, identifying powerful trends like AI and crypto, and learned how to vet small cap projects. This first step is about being a smart hunter. Next, with more capital, we moved to strategy two, airdrop farming. We went from being passive investors to active participants. We learned how to find promising new projects and interact with them to qualify for valuable token airdrops, supercharging our portfolio's growth. Finally, we hit strategy three, amplifying gains with leveraged DeFi and yield farming. This is where we put our capital to work on a massive scale, using advanced strategies like leveraged liquidity provision to create a financial engine that compounded our wealth across the $10,000 finish line. But knowing these strategies is only half the battle. The other half, the part that really makes the difference, is your mindset. The most important lesson I learned was the value of patience and discipline. Crypto is a marathon, not a sprint. There will be days the market is down 20% and your gut will tell you to sell everything. Discipline is sticking to your plan when it's emotionally taxing. Patience is knowing that real wealth is built over months and years. You also have to be a lifelong learner. The crypto market changes at lightning speed. The hot narratives of today might be forgotten in 6 months. You have to stay curious, stay humble, and dedicate time every week to learning. Finally, you must master risk management. This was a theme for a reason. Never invest more than you can afford to lose. Diversify across different assets and strategies, and take profits along the way. Turning $100 into $10,000 is incredible, but it's meaningless if you get greedy and lose it all on the next trade. I make it a rule to secure a portion of my profits after every big win. This journey is possible, but it's not a lottery ticket. It demands a plan, a willingness to learn, and the mental strength to see it through. You now have the blueprint that took me from $100 to a 5-figure portfolio. You have the strategies, the mindset, and the proof that it can be done. If you got any value out of this breakdown, hit that like button. It helps the video reach more people who are feeling stuck just like I was. And if you want more deep dives like this, more actionable crypto strategies and guides to navigating DeFi, make sure you subscribe and turn on notifications. The crypto space moves fast, and I'm dedicated to bringing you the most effective, up-to-date strategies to help you stay ahead. Now, I have a question for you. Which of these 3 strategies are you most excited to try first? Are you ready to hunt narratives with strategy 1? Are you curious about farming airdrops with strategy 2? Or are you ready for the deep end with the advanced DeFi techniques in strategy 3? Drop a comment below and let me know. I read every single one, and I'm curious to see where you are on your journey. Thanks for investing your time with me today. Remember, it's not about the size of your starting capital. It's about the quality of your strategy. Take what you've learned, be smart, be patient, and go build your fortune. I'll see you in the next one.